All right, now, so when we talk about liquidity here, liquidity means money. All right, you are going to get lots of persons giving you that explanation of liquidity. Okay, um, liquidity means money. Okay, that's the basic. That's the simplest definition you can get about liquidity. Simply just means money. But on the other hand, yeah, liquidity is what moves the market. All right, you must understand liquidity is what moves the market, and it's what the market reaches out for. All right, basically, when we trade, all right, the market just goes from liquidity sweep to liquidity sweep to liquidity sweep, just sweeping liquidity. You get what price just does is just goes to grab liquidity, distribute liquidity right here again, grab another one, do the same thing, up down, like that. All right, so like I said earlier, liquidity basically just means money, and then what moves the market, okay, is liquidity. All right, so how can you get to use this information? All right, now what you basically need to know about liquidity and how you should trade liquidity is this. You just need to know where the liquidity lies on the chart, where it lies on your structure. Okay, you need to know which liquidity should be grabbed. All right, now when we talk about liquidity grab, okay, liquidity grab basically just means when price reaches out to take liquidity. Okay, now let's assume we have a structure of this nature. Let's assume we have something like this. All right, let me see, we have something like this. Now, if price should go and do something of this nature. Now, in this case, we have had price take out liquidity above this high and liquidity below this low. All right, so now when trading liquidity, you basically just need to understand where liquidity lies on the chart. Okay, you need to be able to identify the liquidity, because if you are trading and you don't identify the liquidity, then you will most likely be used as liquidity, and trust me, you do not want to be used as liquidity. All right, so like I told you, price basically just moves from liquidity to liquidity. It sweeps here, it sweeps here, it sweeps here, it sweeps here, just through and through that way. Yeah, now you need to understand where the liquidity lies on the chart. It's very important. Now, you also need to understand which liquidity will be grabbed at some point. All right, you need to understand which liquidity will be grabbed. Okay, now we have two kinds of liquidity when it basically comes to trading this. All right, we have internal range liquidity and we have external liquidity. Okay, we have internal liquidity, and then we now have external liquidity. Yeah, now, so these are the two types of liquidity we have, just as the name implies. Okay, now how do you get to apply this what's it called, this ideology to your trading? Now, I told you guys we do have swing highs and swing lows, if you remember, and then we have internal highs and internal lows. All right, so now we have internal, I told you we have swing highs, swing lows, and then we also have internal highs, internal lows. Yeah, let's assume we have a structure of this nature. All right, now let's say we have a structure of this nature. Now, at this point, okay, I trust all of you should already know this. This, at this point, is the swing low. This, at this point, is what? The swing high. All right. Now, this, at this point, sorry. Now, this, at this point, is the swing low. All right. Now, all these highs, yeah, all these highs are what? Are internal highs. Let me change the colors. They are internal highs. So I trust, I know all of you already are aware of this. Okay, so all these red dotted lines are internal highs. Yeah, now when it comes to internal liquidity, okay, we have different types of internal liquidity. Okay, when it comes to internal liquidity, we have different types of internal liquidity. We have what? We have one example of internal liquidity. We have equal highs and lows. Equal highs and lows. That is one, okay? The second is that we have trend line liquidity, yeah? And then we also have what? Inducement. All right. Now, these are three examples of internal liquidity. When it comes to internal liquidity, you get to see equal highs and lows, trend lines, and inducement, okay? And then you can also get to see what? Just normal highs and lows. I'm going to make a cheat sheet for this and I'm going to send it through. All right. I'm going to do that maybe tomorrow, yeah? Then when it comes to external liquidity, yes. Now, under external liquidity, we basically just have what? Swing highs and lows. All right. Now, I am going to explain this right here, okay? Now, looking at this, okay, at this illustration I have on the screen, if you look at these highs, these are what? Equal highs. These are equal highs. Now, one thing you must know about equal highs, yeah, is that one thing about equal highs, sorry guys, is that one high must not be higher than the other. One thing about equal highs is that one high must not be higher than the other, or should I say significantly higher than the other. All right. If maybe we had something of this nature, like this, then at this point, this would not be an equal high to this high. All right. You can maybe call it the trend line liquidity, whatever, but at this point, this is not an equal high. Whenever we talk about equal highs and lows, all right, we want to make sure that what? That the highs are extremely equal. All right. Now, when you have this, sorry. Now, when you actually have this, yeah, when you actually have this, you have equal highs at this point. All right. Now, when you have it the other way around, like this, yeah. Now we have this to be what? Equal lows. These are equal lows. So when we talk about equal highs and lows, you must understand that what? The high and lows need to be at equal price level. All right. And that is an example of an internal liquidity. Okay. So basically now you must also understand that this internal liquidity, they get to form. Okay, you guys are saying my body is darker than my joint. Maybe I should turn it to white. Let me turn it to white. If you guys can see my drawing clearly now, please let me know. If you can see my drawing clearly now, please let me know in the chat box. Someone should unmute his mic and speak. Jonah, can you see my drawing now? Jonah Fish. All right, good.
Yes, you can see.
All right, so let's continue. All right. I was saying something. I said when it comes to equal highs and lows, yeah. So the highs and low must be equal. They must be of equal height. All right. One should not be higher than the other. You should not have something like this. Now, this is not equal high and equal low. All right. And then you should not have something like this. This is not equal high and equal low. This is not. All right. It's absolutely not. Yeah. Now, when it comes to trend line liquidity, okay, you get to see something of this nature. Let me highlight it for you. I think I should even make let me highlight that for you. When you get to equal highs and low, yeah. Now, in this case, right, we have this to be what? Trend line. We have this to be trend line liquidity. We have this to be trend line liquidity. At this point now, this is where we have liquidity line. Sorry. At this point is where we have liquidity line. At this point. So now this is an example of trend line liquidity whereby you get to see that, all right, something like a channel forms in between price movement. Okay, you highlight your trend line, and then of course what lies above this is what is liquidity. Now let me explain how you know liquidity lies above it. Okay, now this whole liquidity supply demand concept, blah blah blah, and the rest, it is advanced, more advanced than the basic retail. All right, it's more advanced than the basic retail price action I have actually been teaching you guys. Okay, that was the basic level. That was like the phase one. I told you guys about it. Yeah, that was the phase one. Now this is a more advanced level. Now at this point, you must construct your thinking to go in a positive direction, to go in a different way other than the retail price action. Yeah. Now the reason while this trend line is a liquidity. Okay, now don't forget, whenever we see liquidity, we expect price to grab it. That is the main point why it is called a liquidity. Okay, whenever we see liquidity, we expect price to grab it. All right, now how do you know it is liquidity? From the basic retail concept I taught you guys. Yeah, now when you have a trend line at this point, okay, when you have price come back to your trend line, what do you do? Somebody should unmute his mic and speak. When you have price coming to your trend line at this point, using the basic retail concept I showed you, what will you be doing? Someone unmute your mic and speak.
You buy. You buy.
You say you what?
Short
You
from
buy.
downtrend.
Who is saying
When
you
the
buy?
trend
Where will you buy exactly? Where exactly will you buy from? When
I
you have
think we
price
should
coming
just
back to your trend line like this on a downtrend, you are going to buy. Is that what
it will sell some.
sell.
he
If
said?
it's
Type it
coming
in the
back,
chat box. Type it, mute your mics and just type it in the chat box. I'm waiting for your answers in the chat box. Everybody should type. We are about 12 in this on this call. Everyone type your answers. you guys not paying attention. You're asking me to repeat the question. I said, all right. I said using the basic retail trend line concept I taught you guys. When you have price coming back to your trend line like this, what do you do? What do you do? When you have price come back to your trend line, what do you do? Buy from which previous resistance zone, for God's sake? Now, when price, using the basic retail concept I taught you guys, when price reaches out for your trend line, you take short entries, okay? Majority of you got that right, and that is good. All right. So now let's assume you're taking short entries at this point. All right. Let's assume you are selling short and you're putting your stop loss above the trend line. You do the same thing here, you sell short again. You do the same thing here, you sell short again. You do the same thing here, you sell short again. Yeah. Now, as you are selling like this, okay, I told you guys that liquidity basically is money. So if you are trading and price hits your stop loss, automatically you've lost money. All right. So if price hits your stop loss, you've lost money, and price has automatically grabbed your money. So it has grabbed your liquidity. So it means when you are trading, your stop loss is equal to liquidity. Because when price hits your stop loss, it takes away your money. It means it has taken liquidity. So it means your stop loss is liquidity. Now, in this case, when you are selling, you're putting your stop loss above this trend line. So what happens, or what this means, is that above that trend line, yeah, above that trend line, what we have lying above that trend line is nothing but money. Let me show you guys. Where's that sticker? What you have lying here is nothing but money. It's money. It's money everywhere because that's your stop loss. And if price should go up to hit your stop loss, it means price has taken money from your account. So you can grab that liquidity. So as you are selling at this point, as retail traders are selling, not you, as retail traders are selling, they are putting what? Piling up money for the market to grab. Now the institutions, when we talk about institutions, we talk about the big guys who move the market. All right. The big guys who move the market. I think I really need to do a very basic course about this whole, this whole advanced terms. All right. So now, when we talk about institutions, okay, institutions are people that move the market. Now, when we come to forex trading, listen to me attentively. We have a couple of bodies that move the market. We have different stages of traders, okay? We have the basic retail traders like me and you. We then have the institutions, we have the big banks, we've got hedge funds, all right? Now, these other three classes of people or institutions trading the market, okay, they are not basically retail traders, all right? They don't trade with $100, $200, $300, $50, $1,000. No, they trade this market with volume. What I mean volume, I mean billions of dollars capable of affecting price movement. All right. So they trade with big amounts of money, not thousands of dollars. I mean billions of dollars. Okay. That is how hedge funds and institutions trade. All right. So basically now, what the hedge fund and the institutions do is that they trade the opposite of what you, a retail trader, is trading. All right. They basically trade the opposite of what you, a retail trader, is trading. So if you are selling, them, they are looking to buy. Do you know why they are buying? Because as you are selling and you're putting your stop loss, their interest is in taking out your stop loss and taking your money away. That is what they're interested in. So now the idea of this whole strategy I'm teaching you guys now is to think like them. You will need to learn. You will need to learn how to think like them so that you get to trade the way they trade. Because if you keep trading like a retail trader using the whole retail price action concept, you wouldn't really be so you wouldn't really be so, should I say, accurate, or you are just going to get stopped out majority of the times. Now, to me, this is a more advanced strategy and a more reliable strategy, and that is why I'm actually teaching you guys this concept. Yeah. Now, when it comes to liquidity, I told you now, a basic retail trader is just going to be selling. He's just going to be selling, putting his stop loss above. But then the institutions are what? The institutions are interested in your money that is lying above this trend line. So in most cases, what you're going to see them do is something that we call the retracement or pullback will start happening, and then boom, they're going to take out all this money. They'll just go up, grab the money, hit your stop losses, boom, money has gone from your market, from your price or from your account. And then what happens? You get to see that what price does, what price sells next. All right. So this is an example of internal liquidity, and this is what a trend line liquidity. Okay. Then the next form of liquidity you can see, I told you guys are what normal highs and lows. Yeah. Now, when it comes to normal highs and lows, you just basically see something of this nature. Okay. Sorry, let me just take that again. You can basically just see something of this nature, yeah. Whereby we have what? We have LQ lying above here. All right. You have liquidity lying above this high. All right. And then you're just going to see price do what? Most cases come up like this, and then boom. Okay. We have the swing high here. We have the swing low here. New swing high formed. Took out internal high, and then we have price selling. All right. So I want to explain to you guys the concept of buy side and sell side liquidity. Okay. So we have what is called buy side and sell side liquidity. All right. Now, when we have price moving, sorry, let me take that again. When we have price moving in this nature, yeah. All right. Now, when we have price moving in this nature, okay, the next thing I want to do now, I want to highlight my highs and my lows. So I'm highlighting my highs and my lows. Sorry for that. Now I'm highlighting my swing highs and my swing lows. Yeah, I want to explain to you guys something. And we have about 7 minutes for this call to go off. So when the call goes off, I'll send a new link. I'm going to send a new link. All right, now, right here, we have highs and lows. We have different, we have a number of highs, swing highs and swing lows, yeah? We actually have a number of them right here. Now, this is a swing low. This one here is what? A swing high. Swing low here. Swing high. Then a swing low here. A swing high. Swing low. Swing high. Swing low. Swing high. Okay. Swing low. Guys, I'm tired. Let's stop there. Now, what I want you to understand is that below and above every low and high here, respectively, we have something lying above and below them, respectively. Okay, so that thing that lies above and is below them is just simply liquidity. All right, above every high and low here. Don't forget the concept of what? Strong highs and strong lows. All right. Now, for every weak low, we expect that the external liquidity will be taken out. All right. We expect that every week low, or week high external liquidity will be taken out. All right. Now, on a downtrend structure of this nature, okay. Now we have this to be what? This is a swing low. All right. So what we have lying below the swing low is what we call a sell side liquidity. All right. And then what we have lying above the swing highs is a buy side liquidity. So if we have something like this, all right. If we have something like this, what lies above this high is what? Buy side is what? Buy side liquidity. Okay. That's what we have lying above this high. And then now, what do we have lying below this low? Okay. What we have lying below this low is called sell side liquidity. Okay. Now, why is it called buy side and sell side liquidity? I'm going to explain to you why it is called that. All right. Now, basically, the way retail traders trade is that when price breaks below the support level, they think that yes, price has broken below support level, so let us sell at this point. They'll be like, okay, let us sell at this point and put our stop loss here. Okay. So now they are selling, sell side, they are selling, but then price does what? Takes out what? The sell side liquidity. They were selling, price takes out what? Sell side liquidity below this low. All right. Now, price does what? Goes up. They're like, okay, it's a buy. 100 lot size. Mark 100 lot size. So they mark it 100 lot size. Okay. And then only for them to see sometimes that what? Price will do what? Come back down. So in this case now, price has taken sell side liquidity. Price has taken buy side liquidity. All right. So that is why we have, that's why we get to call them buy side and sell side liquidity. Above every high, write this down if you're taking notes. Above every high, you have buy side liquidity. Below every low, you have sell side liquidity. If you are following up, send some fire emoji into the chat box. Let me just know you guys are active. All right, I can see the fire emojis in the group in the chat. Just send them if you're following. Nice, 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 nice. Nice. Okay, so we have about 3 minutes left. Okay, usually I'm going to send a new link after 8 minutes. So I'm just going to end this class now, and then I'm going to send a new link after 8 minutes. Okay. So see you in the next class, guys.